Time now for On the Radar, when we speak with our featured guest on what they are looking at in the markets. Just before we get to Allan Small, we will take a look at what the Ford government has announced on its relief for workers who may be affected in the current economic environment, which of course is being defined by the Trump tariffs imposed on Canada as well as other countries. Here are some direct quotes from the Ontario news release. As a first step to support workers and businesses, the province will, defer select provincially administered taxes for 6 months from April 1st to October the 1st. So a 6-month tax deferral is coming. The government says that will give businesses and job creators about $9 billion worth of cash flow they need to keep workers employed. Through the Workplace Safety and Insurance Board, the government will issue a further $2 billion rebate for safe employers to support businesses and help keep workers on the job, in addition to the previous $2 billion rebate distributed in March. So those are the basics of what Ontario has just announced, totaling $11 billion, and what it says is assistance to employers and workers in Ontario. We're joined now by our featured guest, Allan Small, for his views on whether investors should be looking at big tech right now. Your thoughts on the tech stocks, of course, have fallen the most through this. So we, as you know, you've been on Market Call many times on the show. We get a ton of questions and have for the past couple of years on stocks like NVIDIA, Google, Microsoft, etc.
Yeah, it's tough. You know, if you're an investor out there that's trying to take advantage of the situation, you know, buy when things are down, which is what we're all, I guess, told to do and been told to do for years, right? You want to buy low to sell eventually higher. Tech stocks is ground zero, really, for what's been going on. The largest moves to the downside have been in tech. And the problem there is, until some sort of deal, I believe, is made or negotiations are underway between the United States and China, it's difficult. Tech will continue to be under pressure, whether it's the chips, whether it's the, you know, any of the hyperscalers, the big tech in general. I think they will be, whether they have business in China or not. Like, let's say, for example, a Meta, which has very little or no exposure, Google, these names are down substantially. I think both of them down 30% or more from their highs. Yet, you know, if you look at exposure to China, it's not as great as perhaps an NVIDIA or an AMD or some other names. So I think if you're looking long term, if you're thinking AI is in its early innings, I think you want to take a look at a name like NVIDIA. I think you want to take a look at a name like an AMD. AMD down over 50% from its 52-week high. I think any of these names make sense. Meta, Google, Amazon down about, you know, 25, 30%. All these big cap tech names, which once, not that long ago, maybe 6 weeks ago, were very difficult, very high price. Many investors were finding it difficult to move into these names. Their valuations were stretched. That is no longer. If you're looking to buy low and you're looking at the biggest companies in the world, the leaders of the market, of the index, the S&P 500, the $1 trillion, the $3 trillion, once upon a time, $3 trillion companies, this is where I think you can go for the longer term. In the short term, it's going to be a bumpy ride.
What about the oil stocks? You've always been cautious on oil. You were not typically an oil bull. What are your thoughts now?
To me, I think there's two things that are certain from the tariffs. One, obviously higher prices, but two, lower oil prices. And ever since the president came into power, his inauguration in January, he has said that there will be higher prices, but I believe the administration thinks that they can control these higher prices by bringing down the price of oil. That has been their goal, to see $50 WTI, to see $50 a barrel oil, and they're getting close. I think by increasing production, by OPEC now saying they're going to put more barrels onto the market, and just the overall slowdown in the economy that tariffs are causing, this is going to bring down the price of oil. I would not be surprised to see it in and around $50, 50, 55 in the not so distant future. If you're one that is looking for energy or oil stocks, I think it's a difficult buy at this point in time. I'm always one to be a contrarian and buy on the cheap, but I'm concerned because I can see oil prices going a lot lower just based on production, supply demand, and this idea that the Trump administration believes they can fight inflation by bringing down the price of oil substantially.
Are you buying beaten down stocks these days?
I have purchased some. I must admit, I've probably sat on my hands a lot more and watched and listened a lot more than I've made any trades, because like most individual investors, we just can't believe what we're seeing right now. This is man-made, created by one man, and we're hoping that it will be undone by that same man.
That is Allan Small.